Good morning. Good morning. Welcome to another edition of the Black Wealth Rebels Money Church Sundays. Good morning to everybody that's here. Me and Corey are here. Corey's not feeling well, but he's thugging it out. Jimmy's somewhere on vacation. And today we are talking about the 10 commandments of black stock market investing. These are basically 10 things I feel everybody should know when they begin to take their journey into investing in the stock market. They may seem simple, but a lot of times they are overlooked. And we'll definitely go through and share some of the stuff that we went through. I know I go through a lot of this stuff a lot, encouraging people to invest and avoid some of the landmines and traps. But we are here today. We are here today to serve. What's up, Corey?
Nah, man, I don't want to really talk too much, man. I got a stuffy nose, my head hurt.
All right.
I mean, I ain't feeling all that hot, but I'm here, man. So, let's
Here to
go.
serve. Here to serve. The deacons of finance are here. It was 3, but now it's only 2 because Jimmy's somewhere luxuriating on a beach. Shout out to him though.
Yo, man, shout out to that. I need that.
Now Friday, I owe everybody a big apology. We were not here on Friday. That was my fault. I'll take that on the chest. I got caught up in the celebration with Tracy. I thought I was going to be able to be back in time. I was not. I apologize, but I am here now, ready to serve, ready to rock and roll. All right, Anthony is in the building. What up, Anthony? So, all right, all right, so let's get it going. Let's get this morning's presentation going. And listen, as everybody comes in, make sure you come in, speak. You know how we do in black households. Speak, let us know where you're hailing from. And curious thing, what investments are you watching this week? So just let us know what you're watching. So let's get it ripping. All right, so like I said, this week's presentation is the 10 commandments of black stock market investing. I'm getting a little too excited for this because I'm always excited talking to black folks about investing, especially in the stock market. I feel, there's one thing that all of us can do. You don't have to be super smart. You ain't got to be rich. You don't have to come from a well-to-do family. The market don't care about none of that. And I would say it's equal opportunity, but it's not, but it's damn near close to it. Damn near close to it. All right. So let's get this going. All right. So I feel it's important to talk about the historical context when we talk about black folks in America and their investing journey. And if you are into history, or maybe not in history, but many times we were not able to invest, right? So there was a lot of economic exclusion that limited our wealth building for our current generations and our future generations. And, a lot of times that hindered us. So a lot of times people always say, well, why aren't black people more ahead? If you really do the knowledge, we technically really haven't been free until 1965. We didn't have full protections under the law. We couldn't invest in real estate. We couldn't invest in stocks. A lot of times we could not invest in business. All right. But we're not stuck there. All right. Because now, the present, there's a whole lot of technological advancements that make it possible for us to invest with a little bit of money. Jim always tells a story about how when he first opened up his brokerage account, when he started to invest, he had to go downtown. I believe I want to say Capital One, or maybe it was another company downtown, which is, I think he said 16th and Walnut. Now, Jim is from downtown. Jim is from Germantown. Downtown, that's a good hour-long bus ride. But Jim's people are rich, so they probably got a car ride. I told you I was going to slander Jim when he was going. But all in fun, of course, all in fun. But I'll tell y'all about when I first started investing. I had to open an account with Morgan Stanley, and I got what was so-called the hookup. Now, I was supposed to have $2,500. They were running a special. I only needed $500 to open a brokerage account. And I believe to invest in a mutual fund, they charged me like $20 each trade or something like that. It was real crazy. real crazy. Now you don't have any of that. All of those barriers are gone, right? So now we can look to the future and we can build generational wealth for ourselves, our families, and our overall communities, all right? By using strategic investing and leveraging what we have today. All right. Now, I stress this more, or I can't stress this enough. Please learn before you try to earn. There's a lot of people who just want to get rich quick, find those hot stock tips. I get it all the time. And I see people lose their money, lose shirts. I have a buddy of mine who invested about $40,000. This is recently too. Invested about $40,000 into this guy or this program, investing this money. Supposedly was crypto and some other things. Some other people around him made money. He wound up losing all the money he put up. He couldn't afford to lose $40,000, but he did. And now he's got to earn that back. And that hurts. It hurts a lot. And that was because a lot of times people are chasing. They want to get rich real quick. They don't want to do the work. They don't want to do the knowledge. They don't want to be patient. And so, again, learn before you earn. Read books. Speak with credible people. Don't follow every single person online. And listen, we are guilty of being in the online sphere. But we always tell you all, make sure that you do your own research. None of this is investment advice. This is for educational and entertainment purposes only. Okay? So before you do all that, don't be in a rush. Start slow. You don't got to try to invest $40,000 to try to create, generational wealth in one day. When you look at the Buffetts or any of the other quote unquote big money people, they didn't do it in a day. They did it over decades and decades and decades. And oftentimes, many of them got started on the second leg of their generational wealth because their daddies, their mamas, their grandmamas passed on stuff to them. It's not the same for us, y'all, but we just got to take it in stride. And we keep that in mind, y'all. Keep that in mind, all right? Start with what you have. Again, start with what you have. You don't need a whole lot of money to start investing. Like I was saying, when I first opened my account, I had to put up $500. Today, you can start investing with merely $1. That's it, $1. And you can open an account. And we'll talk about that in a little bit, right? But you can use micro investing apps like I always talk about Cash App. You can look at Acorns. You can look at Stash or Public. It doesn't take a whole lot of money. Now, in one of these slides here, it says fractional shares. Now, fractional shares really is a cheat code and a great advancement in technology where you can take one share and you can just buy a portion of that one share. Many times when I meet people and talk to people about stocks, they say, I don't have money to buy a stock, right? Now, when you see in that box, it says buy portions of expensive stocks like Amazon or Google. Put in the chat if anybody knows what Google is trading at today or what Amazon is trading at today. It's pretty hefty. It's not $1. It's not $5. It's a little bit more. All right, so I looked it up before we got going. Google was trading at $170, $174. That's what it closed out at on Friday. $171.74. Excuse me, and it's not Google. It's actually Alphabet. All right, they changed the name. Alphabet owns Google and a bunch of other companies. All right, Amazon stock closed at $205.01. So 205. Many people believe you need that whole $171 to buy Google, to invest in Google, or you need that whole $205 to invest in Amazon. That's not true anymore. You can buy $1 worth of Amazon. You can buy $1 worth of Google. And here's the thing. We don't need to worry about buying the whole thing because what we are really interested in is the price appreciation of Google. So if Google stock goes up by 10%, your dollar that you invested in it went up by 10%. If you invested $1 into Google And if it went up by 10%, your dollar went up by 10%. Now, to be fair, to be honest, stocks can also go down. So if the stock went down by 10%, the dollar you invested would have went down by 10% in whether it's Google or Amazon. But we know normally over the lifetime of stocks, if we go back and we look over the last 100 years of investing, the stock market in general, broadly, returns anywhere from 10 to 12%. So more than likely, if you invest your money for the long term, your money's going to grow. Your money's going to grow. Now, I ran some numbers. All right. So if you consistently invest small deposits over time, you tend to win. Now, if y'all familiar with us and y'all rock with us, y'all know we say DCA equals the wealth cheat code. Now, consistently investing small dollar amounts is the same thing as what we're talking about. DCA means dollar cost averaging. And that's just putting the same money in over and over again. Now, I hate to do this, but I wanted to give you all an example. Had everybody invested $25 into Google over the last 10 years, or invested $25 a week, invested $25 a week into Google, or $25 a week into Amazon, you would have had roughly $63,789 in Google. Again, you don't need a whole lot of money. If you would have invested $25 a week into Amazon over the last 10 years, it would be worth $61,000, almost $62,000. Now, does anybody need an extra $10,000 or extra $60,000? Well, you might not have it right now, but you could begin to build it for tomorrow. And you can do it with as little as $25. I know that's not sexy. I know that might not be exciting, but real wealth generation, people that are really getting to the money, they all about that boring investing, y'all. They all about that boring life. They do what they do. They make their money. They invest. They're not looking generally. These are broad strokes, y'all. They're not generally looking to get rich quick. All right. They're looking to get rich over time by systematically doing the same thing over and over and over again. All right. So buy and hold for the long term. All right. You're planting seeds, right? It's like being a farmer. I always tell people when you are looking to build wealth, you have to have a farmer's mindset. And what do farmers do? They get up early. They plant their seeds. Once they plant their seeds, they then de-weed the seeds. They take all the weeds out. They make sure the seeds get plenty of water so they can grow. They get sunshine, right? Sometimes they often have to scare away the critters also, because certain things like deers and other animals will also try to eat the seeds and eat the fruit as well. So you got to protect against all of those things. But again, you have to have a farmer's mindset. It's like you do the same thing over and over and over again. You're going to hear that. You're going to hear that from me. Well, you hear from me, Jim, and Corey a lot of times. You got some, Corey?
Nah, I was just saying, it's the cheat code because it creates consistency, right? And consistency is one of the things that humans struggle with. So when you do anything that creates consistency, that's always going to be a help.
Now, real quick, I saw a comment on one of our last broadcasts where we talked about anybody could be a millionaire. And someone said, well, why only 9% of U.S. people in the United States, or 9% of the U.S. population, millionaires? And that speaks directly to what Corey just said. People have a problem with consistency. They think just because only 9% of people have done it, that it's basically impossible. But they're not willing to do some of the habits that the 9% of the people have done. Most people didn't arrive with a silver spoon in their mouth, right? A lot of people got it from the mud. And so once you understand that and you can adjust your mindset, you can do a whole lot of things. You can do a whole lot of things, y'all. All right. All right. So I just talked about dollar cost averaging, so I don't want to belabor that. But really, dollar cost averaging is just about putting roughly the same amount of money in over and over and over again. No matter if the market is down, no matter if the market is up. It's just doing that, establishing that habit. And that's what it is. All right. You're not looking to time the market. Don't time the market. Do not time the market. Again, like our Dr. Umar says, don't time the market. It normally doesn't work. Now, if you want to be a person who sits in front of the screen and you want to trade often, then yeah, maybe you can develop that skill if you have talent for it. Most people don't, though. Most people don't. All right. So avoid news hype, because news hype is usually geared towards short-term blips in the market. It usually drives emotional decisions. We all know that when emotions are involved with your money, it usually doesn't work out well for the people with their money. All right. So again, just dollar cost average over and over and over again. If you got 25 bucks, put it in, let's say, every time you get paid. If you can afford 50 bucks every time you get paid, that's great too. If you can afford 200 bucks every time you get paid, that's great. That is why so many people are able to build wealth in 401ks, because a lot of times it's already automatically set up and nobody has to really think about it. They just set it, they forget it. A lot of times they're getting free money from their employer. They're working that out, and it's tax deferred. It's tax deferred. So keep that in mind, y'all. Now, this one you got to kind of take with a grain of salt. Diversify that portfolio. When you're first starting out, I don't really think you need to really diversify too much. Now, once you amass a major amount of money, you got to start thinking about diversification. And diversification is just there to make sure you don't lose all your money. All right. It's a wealth protection strategy. And you can do it pretty simply by buying an ETF, because ETFs will naturally buy big baskets of stocks. So if you look at ETFs like VU, VTI, SPY, those are all ETFs that invest in the overall stock market, S&P 500. Again, this is not investment advice. This is for educational and entertainment purposes only. Do not invest based on what we are saying. Invest based on your study, all right, and your education levels. All right. So now, one thing a lot of people miss out, and if you've been tuning into us, we've been talking about reinvesting dividends. I've talked about how my dad was buying General Dynamics stocks since the 70s, but he wasn't reinvesting the dividend. And y'all know he recently passed. Had that money been reinvested, I might not be here with y'all today. I might be on the beach, y'all, drinking a cocktail, getting my foot rubbed, put my feet in the sand. I might be doing something fun, like Jim is right now. All right, but just think about that right here. The illustration is 10,000 invested, a 3% yield over 20 years. That would be roughly $57,000, almost $58,000. That's a lot of money, y'all. That's a lot of money over time, just by starting with small things. You don't got to do nothing big and complicated. Start out small. All right. I can't say this enough. Avoid the meme stocks. Avoid the meme stocks. I know we saw, who was it? What was the name of them? I remember Doge. That wasn't a meme stock. That was the crypto. GameStop. And there was a few other meme stocks. Can anybody put some of those in the chat for me? Corey, do you remember any of the meme stocks?
It was GameStop. It was GameStop. It was oh man, it was a bunch of them. Damn.
I'm trying to remember who a bunch of them. It's funny though, I ignored a lot of that, y'all.
Yeah, I don't remember all of those. That was years ago.
Right. But they do get their run every now and again, where we saw all the Reddit communities getting hyped up and trying to push all this stuff to the moon. All right, so I see a couple people here. All right, good morning, y'all. All right, so AMC. Yes, AMC was definitely a meme stock. All right, and I'll get back to the comments in a minute, y'all. Give me 1 second. But yeah, GameStop, AMC, there was a couple others, but I always ignore those. You know why? they're not good companies. And so I tend to ignore them because I don't think they're going to last that long. For my long-term investment, I try to adopt like Warren Buffett does. He invests for the first 100 years or invest for 100 years. That's his time horizon. That's what I'm looking at. So he's buying it and he never wants to sell it. Now, if something really develops that's really, really crazy, for example, Core, what was the UNH, United Healthcare?
Yeah.
CEO got murked. That's a major development. That might make you look and say, I don't want to own this anymore. All right. That's something very, what we call material, that, you know what, you can't ignore that. We have to go back and say, all right, well, the new CEO they're going to bring on, is that person going to be good? Is that person going to be targeted? Will they be, pew-pewed, as they like to say over there? So you gotta analyze those things. But I'm not looking to jump in and jump out. It doesn't make sense to me. Doesn't make sense. All right. Now, y'all know I'm the tax guy, but I love stocks too. But one thing I always got in trouble for when I was a financial advisor, I would always talk about taxes. They would always tell me, meaning the other advisors that I work with and that kind of mentor me and I shadow, they was like, Amari, why are you always bringing up tax? We just here to solve the thing. We don't need to think about tax. For me, though, every financial thing that we do always has some kind of tax ramification. If you're buying a stock, well, let's say it's in a regular personal brokerage account. Well, that stock might generate dividends. Those dividends will be taxed. So that's going to have a tax implication for you. If you're going to buy and sell those stocks, that could have a tax implication for you. When we were talking about life insurance, all right? A lot of times when you get life insurance and when it pays out, when someone unfortunately passes, it's supposed to come out tax-free. Sometimes it doesn't. I'm experiencing that right now, again, with the passing of my father as well. So again, you want to make sure you're putting your money to work for you, and that Uncle Sam is not taking, or what I like to call Uncle Scam. Uncle Scam is not taking too big of a cut. You got to pay Caesar what Caesar's due, but you want to use the laws that are already there to make sure you mitigate and pull down your tax bill as much as possible. So when you look at things like the Roth IRA, your 401k, 529 plans, HSA accounts, things like that, it's really, really a powerful thing to do, and something everybody should take time and think through and look through as they're going through their investment journey. All right. Now, when you're building a legacy, you want to think about this. When you're building from the bottom up, you want to make sure you have life insurance, because life insurance is there to replace income, just in case somebody is no longer there in physical presence, physical essence, to bring money home, to put money on the table, to put that bacon on the table, to pay the light bill, right? You need that just in case something goes wrong. And now, custodial accounts. Now, I don't know if y'all remember a couple of episodes ago, Jim was talking about his great nephew, I believe it was. He said he set up a brokerage account for him already. I'm not sure if that's in Jim's name or the child's name, whatever, it doesn't matter. But it's a custodial account that's designated for them. Corey talks about how his father, every time for all his children, has a stock account set up at birth. So those are things that you can do to set up for the next generation. Now, the custodial account is easy, right? I was telling y'all that I got inspired by Jim that I'm going to start a brokerage account, but then I thought about it. I don't need to start a brokerage account. My dad had already done one for the grands. What I'm going to do is I'm just going to keep adding on to that. And it doesn't have to be a whole lot of money because time is on my side. My latest grandbaby just got here about a month ago. And so as I start putting money in for her, that's going to grow. We got at least 20 years before they're going to need that money. So can you imagine if I just put $10? Matter of fact, this is funny. I was in my group chat with some friends of mine. Another buddy of mine is now a grandfather as well. And I was sharing with him that I'm starting a brokerage account for my grandbabies. And I'm going to put anywhere from $25 to $50 a month. But at $50 a month over the next 30 years, that'll be about 30 grand to 50 grand if everything's invested into the S&P 500. To me, that's a no-brainer, right? Again, I'm going to have life insurance, but I'm also going to put some other monies aside so my children's children have a better start than I did. Because to me, that's what it's all about. It's not about me. It's about what I can do for the next generation. All right? Now, here's some resources and some books I feel everybody should read. Remember, look, you want to start to learn before you earn if you haven't done anything yet. Dennis Kimbrough's The Wealth Choice is a great book. All right, that's a great book that I think every Black investor should read. All right, a lot of great foundational things and ways to think about things, and you get to see a lot of other people's experience. Matter of fact, I think, I got that book right here. I got it. I love it. Matter of fact, I might read something from it before we get done. But great book. And the other thing you can do is to begin your journey. If you've never started, again, get the apps. Start with the apps. You can use Cash App. A lot of people use Cash App to send and receive money, but many people don't know you can invest with Cash App. Now, I know a lot of y'all rock with me. Champ, I see you in here. Thanks for joining. Champ knows that I rock with a couple of padres of mine, Michael Sean and Jay Black, usually on Thursday mornings when it's on Thursday mornings, and we do what's called AM money ratchetness. And so we just have fun because Michael Sean's a comedian. Then I'll usually talk about something financial as well. But I got them to start investing through Cash App, $10 every week. And I had them investing in VLL. They've never invested before. They don't do much of anything. I said, this is a great baby step for them to take. Again, that is not an investment recommendation, but it's just something I want to encourage people to do because I know, because I've been investing for myself and professionally for years, and I get to see the benefit from it. And I think our entire community should be able to see the benefit of investing, of planting seeds, not just for ourselves, but for our children, our children's children, and our community overall. You know, we got to plant the harvest. We got to plant the harvest, y'all. Now, here's just a couple of words of financial affirmations, right? I know a lot of times people are scared of investing, but this is something that I came up with because I'm really big on affirmations, right? So I'm a financial investor. Starting today, I claim my place in building wealth through the market. That's just one affirmation. I say that affirmation to myself. And it's funny, some of y'all might call this corny. I used to tell affirmations to my kids or say affirmations to my kids and have them repeat it as well. Because I believe you do have to program your mind because everybody else is trying to program us. Now, another affirmation, I'm a wealth builder. Each investment decision each investment decision moves me forward towards financial freedom and security. That's another one, right? All right. Now, here's one a lot of people I want to address who feel like, well, I've never invested. I'm in my 30s, 40s, 50s, 60s, and 70s. And they feel like, what's the point? Or I'm afraid. And so I say, I'm not behind. My journey begins now, regardless of my past financial decisions. I'm going to read that one again. I am not behind, all right? My journey begins now, regardless of past financial decisions. A lot of people need to understand that. Yes, we are all a combination of our financial choices and decisions, but today we can make the choice to change a lot of things. Today, we can be intentional. Corey talks about being super intentional about what we do, how we're investing, what we're reading, the environments we're creating and surrounding ourselves with. That's the same thing, all right? And lastly, I am creating a legacy, all right? My financial discipline today, because you need financial discipline to do anything if we're talking about this wealth game. All right, my financial discipline today creates abundance for generations tomorrow. In that old Bible verse, Proverbs 18:22, a good man or woman leaves an inheritance for his children's or her children's children. So the things that we do today will impact us tomorrow. The things that we do today will impact our next generations. And we got to start thinking like that, moving like that in everything we do. That's all I got for today's presentation, y'all. What questions do you have? And we will get right into the comments. All righty, hold on. Corey, you got anything before we jump into this?
Take care of yourself, because I'm over here sick as a damn dog.
Corey, I thank you for troopering this out, sir. All right, so Anthony's here. Welcome. Nicole, what up, Nicole? Good morning to you. Champ, what up, baby? All right, what's more important? Getting out of debt, having an emergency account, or starting investing? Well, I would say all three of them. You need them all. You got to get out of debt because the interest rate a lot of times on that debt strangles you. All right. You need an emergency account because a lot of times people get into debt because they don't have funds for emergencies and they wind up getting into debt. They taking out loans or borrowing money from people just to handle that emergency. All right. And I believe you need to start investing now. So you don't want to wait. And again, you can start small because you don't want to miss out on any potential gains. And so that might sound weird to a lot of people because some people just want to focus on one thing. And sometimes that makes sense. However, life doesn't work like that. When you're driving in the car, you got to drive, you got to look, you got to press the pedal, you potentially got to press the brake. You got to operate in different fields at different times to make sure you're able to travel and get to where you need to be. Traffic might come. Do you stop driving? No, you keep moving. But you do it, you move cautiously though. What up, Jigga? All right. Double A, good morning. Double A says, morning, fellas, keep spitting the super hot fire. Die line. Now, if any of y'all know, that's from Making of the Band. That's been coming up a lot lately. All right, Brenty, good morning. Good morning to you as well. And Denise Joseph says, good morning. Yep, AMC was definitely a meme stop. How many people were actually going to the movies? In 20 years, here's a great question. In 20 years, do you think movie companies will still be making money that they made 10 years ago? Because they're still not making money like they were 10 years ago, especially after COVID, especially with the advent of Netflix and Amazon Prime and all these other streaming services, Apple Plus. There's a couple others. I got like all of them. Yep. Okay. Dogecoin, Brent says. All right. Tax implications is extremely important. Yes, it is. It's often overlooked. All right. That's dope, Brent. Brent says, I had that book. Very informative. Yes, it is. Now, it's funny. I have this book. But I also have this book from Dennis Kimbrough. Now, this one, I just realized it's ripped. All right. So Dennis Kimbrough redid Think and Grow Rich for a Black choice. He did it from a Black perspective. But this one is Daily Motivations for African American Success. And this one has like a thing every day. I'm pretty big on what people might call the woo-woo stuff. But I'm really big on motivation, inspiration, things like that. And so every day this has a quote and like a passage for you to read. So today is June 1st. And so here it says, heavy metal. Can nothing make your life work if you ain't the architect? Again, heavy metal. Can nothing make your life work if you ain't the architect? Terry McMillan, author and lecturer. Now, Terry McMillan was the author of, was that Waiting to Excel, Corey? I think it was. Right. So Terry McMillan, I mean, like, so we can see, like, she's done some things. Now, in that book, it gives you that quote, and then it gives you some more stuff. I don't want to read it and bore you out to death. But he'll usually add a story underneath it as well. And I thought it was really informative, but I'm not going to read it all. But this is another good book, I feel, for overall just daily motivation for people who are looking to be wealth builders, who oftentimes are first generation wealth builders who are thinking about getting it out the mud and just want a good word. All right. Thoughts on high yield ETFs? I love them. I do. I love them as well. I think they're pretty good. Oh, I just froze. I do have a couple that I like. There's one that invests in, it's not technically high yield, but there's one that invests in, let me look it up. Let me get it right. Let me get it right. I want to say corporate, give me 1 second. Give me 1 second. Right. There's one that I really like. I haven't looked at it in a while, but they invest in preferred stock. And so if you look at the chart, it pays a great dividend, but it's pretty stable. Let me pull this up real quick. One that I like to use as a proxy for cash, but I want to be very, very clear. I want to be very, very clear. When you put things into market-based products, they're going to react like the market, meaning they're going to go up and they're going to go down. And so a lot of people will say, well, cash is trash. Actually, me and Corey debate that all the time. But when you need your cash, you need your cash. And let's just say I got $10,000 just sitting doing nothing. I might put it into this ETF because I wanted to get some yield. But I also know that if I need it, it might be down on any given day. So keep that in mind, y'all. Keep that in mind. All right, so I'm going to show y'all a chart of something real quick since you brought up that. Hold on, let me share this. You all right over there, Cora?
Man, I'm watching you work, bro. I can't really get myself together. I'm trying, bro.
Well, hey man, you ain't gotta be here, man. Go get in the bed or something. Go get. All right, so this right here is an ETF that I like. Ticker symbols PFF. It invests in preferred and corporate stock, corporate preferred stock. All right, but it doesn't move that much. And so, it's going down, but this is a monthly chart here. This is not a daily. This is not about trading. And it pays, let me see, how much is this dividend? It's either 4 or 5%. Give me 1 second. Give me 1 second. This sucker has paid. Where are you at? It's got a dividend yield of 6.92%. And so I like this because it's been very consistent and it is done. And again, this is not an investment recommendation. I'm sharing with you all something I use in my personal account. But this is not an investment recommendation. And so I will use that as a proxy for cash. If I don't have any other place to put my investments in. I'm like, okay, I can sit this here and get roughly almost 6-7%. And it's good to go and it's pretty stable and it doesn't spike up or spike down too much. It's just kind of steady as it goes, steady as go. All right. All right. Hold on. I'm coming back, y'all. All right. All right. Found my channel through Erica Williams. All right. Great. Shout out to Erica. Erica's dope. All right. Good morning, Miss Maui. Lorraine, how are you? What up, Cedric? Good morning. Thank you for the encouragement.
I'm gonna go lay down, bro.
Okay. All right, Cora, go ahead. Thoughts on bros. I haven't even heard of that. Let me look it up. While I'm looking it up, I will also thoughts on bros. That's the Dutch company. What I'm seeing. What about a high yield REIT? What's that REIT like? I know Jimmy talks about it all the time. I actually brought some of it too. Hold on, I'll pull that up for you, Nicole. Dutch Bros Coffee Chain. I don't know anything about them. Let's see. All right, so I just did a quick look up on Yahoo Finance. So, all right. Dutch Bros, together with its subsidiaries, operates and franchises drive-through shops in the United States. The company operates through company-operated shops and franchising in other segments. It operates through company-operated shops and online channels. They said the same thing over and over again. I hate that. Under Dutch Bros, Dutch Bro Coffee, Dutch Bro Rebel. Okay, anything with Rebel, y'all know I like. Dutch Bros Blue Rebel Brands, Dutch Bros Inc. The company was founded in 1992 and is headquartered in Grants Pass, Oregon. Okay. All right, so they're totally out of the way. And the stock is up. It was up on Friday. Almost 3.5% is at $72.20. Okay. This is definitely something I would check out because it's funny. Coffee is such a have good operations because it's retail. And we've seen Dunkin' Donuts and Starbucks do really, really good in that area, but everybody can. But when it's done, oh boy, because it's high margins. It's high margins. Wow. Year to date, the stock is up 37.84%. Dutch Bros is interesting. Dutch Bros is definitely interesting. Something I would look at again. This is not been recommendations, y'all. Sadly, when we are here on the public spaces, we got to be careful because a lot of times people will blindly just take advice, or not even advice. They'll take things that we talk about. They won't do any research. And then they'll say, oh, we didn't make any money. Well, you didn't do any research either. But nobody wants to talk about that. Got to do your research, folks. Can't rely on me, anybody else, any of these more popular people. Our channel's small, right? We're not trying to compete with anybody. We want to give good, solid stuff. So basically, we ain't lying to y'all. Yeah, that definitely, this Dutch Bros, though, looks very interesting. I'm definitely going to check it out. What up, Jarrell? How are you? And oh, they're only a drive-through. Okay, I don't know. I definitely got to check it out. All right, Brent says he likes PDI and SDIV. I believe SDIV is Schwab's. Schwab's. Oh no, that's Global X. So that's Global X Super Dividend. All right. So I like Schwab's dividend as well. Schwab is, I want to say, is SCHD. SCHD, U.S. dividend equity ETF. Yep, I like that one as well. Now, Nicole, you asked me about the REIT, the high yield REIT. All right, hold on. Give me 1 second. And don't forget, y'all, this show is also sponsored by Supplement. Can y'all see it? This thing stays hot. All right. So anytime you guys buy a supplement, make sure y'all get it. It's a black-owned company, quality product. Check them out. Go on over to Get Supplement, and you can buy yours. And they support the show every time you buy one of these things. All right. So make sure you go on over to Get Supplement, GetSupplement.com. Get Supplement. Great product, y'all. Again, I think I've told y'all how many times I have used this coffee mug. I put coffee in at 7:30 in the morning. At 1 o'clock in the afternoon, it's still warm. Not piping hot, but it's still warm. All right. So everything here is free for y'all. So we are always looking to use quality black-owned businesses to make, to help build up our platform as well and support some of these things. Doesn't cost you any more, and they will pay us maybe a small commission, $1 here or there. Were you going to recap the 10 Commandments? Yes, I don't mind watching. Yep, I am. But I wanted to answer these questions before I got them. And I'm still looking for the ETF. I actually own this ETF, but I can't think of the ticker symbol. I know it's X something. Give me 1 second. Now, if y'all want to look at some of my stock, I did a whole show on that. I believe it's on the Finance Rebel channel. And I recapped what I did in the portfolio I had my dad build out for my kids, his grandkids. Let me see. All right, let me get this. Where is it? XLRA. That's what it was. I can't remember. XLRA. All right, what's up, tough guy? Welcome. Good morning. All right, TC, what up? Can you retroact my supplement purchase for the show? I don't know what you mean by that. I brought the gold tumbler when y'all were first mentioning the brand. I was too fast. Nah, it's all good. I mean, at the end of the day, we always want to support Black businesses first and foremost. The fact that we're able to get an affiliate or a commission for it is a legendary or a secondary type thing. So, but how was it? How do you like it? So, again, my Tumblr, that thing works. How's yours working? I would love to hear about it. Did you love it too? Have you even used it? All right, do me a favor, everybody. Also, like, comment, and share. Like, comment, and share. So, Nicole, that is the high yield dividend, the high yield REIT. I know Jimmy owns, I own. Again, these are not recommendations for y'all to buy. Do your research, do the knowledge. All right, do the knowledge, and let us know how you make out. Let us know how you make out. Thoughts on bros? We got that already. Yes, hit the like button. Hit the like button. Just kidding, but I do enjoy the tumbler. I should have added the straw, only hiccup. Okay, all right, so you like it. So again, this isn't just me talking about it, right? We also have someone else vouching for the product, stating that the product is great. All right, so listen, y'all, if we don't think about and be intentional about building businesses in our community is always going to be destined to be second class or treated like second class because we don't have the economic wherewithal to build certain things. And no, it's not going to fix all the problems. I'm not trying to suggest that at all. I'm not trying to tout that we got 1.7 million in spending power. Nope. What I will say though is that it makes sense to use what money we do have to support those who are in our community. No more, no less. All right? No more, no less. Now, anybody got any other questions? Any other questions? What are y'all investing in? What are y'all investing in? That is something I am interested in. So I see y'all like these dividends. Y'all liking these REITs, which I like them too. I like them too. So let's see. Anyone else? Anyone else in? All right. Well, hopefully today was good for everybody. All right. Hopefully it can give you some inspiration as a guidepost to help you think through some things and know that it's never too late to start investing. And just know that it's not always pretty, but it always works in the long run. In the long run. All right. All right. And since I've been going hard in the video, pause. I'm not doing pause, man. Y'all know that. I'm on a pause strike. All right. I've been going hard in the video. Pause, buy and hold. All right. I ain't mad at that. I do. When will NVIDIA's competitor show up? If it even gets a competitor, right? Because there's some companies that are just so good. They have a big moat. You know, we talk about a moat and nobody can really overcome it. But then there's companies that are able to come along and do certain things. You know, they're able to build, they're able to get market share. All right. So I do wonder about that. All right. Nicole, the name, or Nicole asked me to repeat the name. Please repeat the name of the high yield REIT. XLRE. XLRE. As a matter of fact, what I would do, let's talk about XLRE. All right. All right. You're an AMD too. Yeah, that is their competitor. But AMD has been in the chip space for a while. But the way NVIDIA is positioned with their graphics card chips, they are head and shoulders above AMD. And I think AMD probably tried to catch up way too late. But I don't know. What I need to do is I do need to do some research just to see where NVIDIA is positioned at in terms of competition. I know they're head and shoulders of everybody else. You would think Intel would have a bigger foothold in the chip space, but they don't. They don't. They don't. Thank you, Brent. Thank you, Brent. Brent was just letting that fly, letting everybody know. XLRE. I'm about to pull up in a minute. All right, my new ad was CRM Salesforce. Okay. Salesforce is definitely a monster as well. Right. All right, so let's go through XLRE. So anytime you're looking at any investment and investment, this is for educational and entertainment purposes only.
It's only entertainment.
That's it, y'all. It's only entertainment. It's only entertainment. All right, but hopefully our goal is we are not doing mindless entertainment. We are doing mindless, we are not doing mindless entertainment. We are doing entertainment that hopefully helps to feed your mind and your spirit. All right. Now let me pull this up on the screen. I want to pull up XLRA and we can talk about yeah, that's too small. There we go. Then we can talk about, some of the ins and outs of performance. XLRE right now is trading at $41.69. That's what it closed at on Friday. Now, assets under management, $7.3 billion. All right. So they got the M in the bottom or at the end. So you know that everything is denominated in millions. So first million, right? Million, 10 million, 100 million, billion. All right, just to keep that. You know what? And I'm pointing to this like y'all can see it. All right, but I'm cracking myself up now, y'all. So the expense ratio was 0.89. Definitely something you want to keep an eye on to see what's going on. And let's see what the overall fact sheet says. Might be a little bit more succinct. No, I think I'll just stay here. All right, so performance. So year to date, it's up 2.34%. Again, this is XLRE. All right, since inception, it was created in October of 2015. It's up 7.1%. Now, remember, ETFs track what's called a benchmark. This is a State Street ETF. All right. So remember, they track a benchmark. And so then they'll buy the stocks that are in the overall benchmark. The benchmark is just a list of stocks or investments for ETFs, in this case, of stocks that are in the REIT space. The top holdings: Prologis, American Tower, Welltower, Equus, Digital Realty Trust, Simon Property Group, Realty Income Corp, Public Storage, Crown Castle, CBRE Group. So those are the top 10 holdings. So, and then when you look to the right, it'll tell you how many shares. It'll tell you what's the weighting, right? So 9.4% of that stock, 9.4% of the assets are owned in Prologis. 9.31% is owned in American Tower. And so if you really want to get meta and really dig deeper, you'll start looking into some of these other companies as well. Because once you do that, you'll start to get a better understanding of the overall REIT industry for the most part. Now, REITs have different asset classes as well, different sectors in them, right? Because you got lodging, you have lodging, you have retail, you have like big office buildings, you have what's the word I'm looking for, y'all? You have lumber, There's a lot of different sectors in overall REIT. So you also want to you also want to have an understanding of the overall makeup of REITs, because they're not all the same. All REITs are not equal. And you want to know how these REITs make money. A lot of times, some of these REITs, group here, but I'm speaking generally, they will take on debt to pay out their dividends. That can be a very dangerous thing to do. So you want to know how they're paying their money out. So again, you have to do your research. You gotta do the knowledge. There's no substitute for it, y'all. There's no substitute. All right. So Andolph says NVIDIA will supply 90% or more of all data centers that will be popping up over the next 20 years. Yeah, they've got a pretty strong lead. It's crazy out here. All right. Now, let me take this down. I got too many tabs open, y'all. So my machine is lagging. Yes, I'm one of those guys who has too many Chrome tabs open all at the same time. And technically, I should have rebooted this machine before I even got going, but that didn't do that. It's my bad. Again, you're watching the Black Wolf Rebels. This is our Sunday Money Church. Everything we talk about is for educational and entertainment purposes only. Today's show is all about the 10 commandments of Black stock market investing. All right, for Black stock market investors. Now, I know y'all wanted me to recap. I was definitely going to recap anyway. All right, now, first thing, thou shalt learn before they earn. Thou shalt start with what you have. All right, again, you don't have to have $1 million, $100,000, $50,000. You can start with just $1 in investing. It doesn't have to be a whole lot. There's no shame to any of this. You start where you are, start with what you have, and then you move on from there. All right. Thou shalt buy and hold for the long term. All right. That's commandment number 3. Commandment number 4, thou shalt dollar cost average faithfully. Number 5, thou shalt not try to time the market. Again, trying to time the market is a recipe for disaster. If you go back and you study the history of the markets and many of the things that cause it, especially in the last 30, 40 years, people was trying to time the market. They messed things up. All right. Thou shalt diversify their portfolio. Again, that's one, like I said, you got to take with a grain of salt. It depends on where you're at and look at what you're looking to do. All right. Also, one thing I didn't mention, I will get to the rest of these. Time horizon is everything. All right. So remember when I said I like to think like Buffett when I'm thinking about my time horizon in terms of how long I want to hold a position. I said 100 years. So sometimes, not sometimes, all the time, every time you're thinking about investing, you got to think about, well, how long am I looking to hold this asset? So I have a friend of mine who is saving for a house. Now, if you go back, I've talked about this before in some of our financial planning and I believe our asset allocation and capital allocation shows as well. All of the things that you want to buy, the things that you want to purchase, your goals matter when it comes to investment. So I have a buddy who was investing to buy a house in about a year or two. Trump started getting in there and doing what Trump does. Market falls. All right. But he was being a bit more aggressive. Now, when you think about your investments over the next 10, 20 years, you can go long term. If you need something in the next 1 to 2 years, you should be having your assets allocated to more safer things, not riskier things. He was risky. He was being greedy. You don't want to be greedy, y'all. And again, I always stress, take your time. And he knows better. But he wanted his money to be ready whenever it's supposed to be. The market will do things at unexpected times that you can never count on. And he's kind of in the quandary right now. He's got a sourpuss face because he was ready to start buying, looking at his house, but his money's not right. So he's got to wait longer. And he might have to even work longer for retirement as well because his asset allocation is out of whack. Now, I try to tell him that, but he doesn't believe me. He feels he has more knowledge than me. And that's cool. That's cool. Because again, I've always wanted to see people be able to stand on their own. But you got to be able to take the good with the bad as well. The market is not always going to go straight up. Again, over time, it will. But during the short term, you will have some blips. You will have some blips. All right, so don't try to time the market. Number 6, thou shalt, oops, did it wrong. Number 7, thou shalt diversify. I just messed that up to y'all. Number 7, thou shalt reinvest dividends. Again, number 6. All right. You want your profits to grow. And you want to have all the money that are coming from the dividends to go right back in to buying shares. That's a faster way of building wealth and building a nest egg for yourself. So don't take the dividends. Don't do like my dad did. He took the dividends, he put them away. Now, my dad was a saver. He was a saver, clear about that. But he didn't maximize his capital because he just put it in the bank. When he didn't need the cash, he could have put that cash to work. And again, I would probably be on the beach somewhere right now. All right, thou shalt avoid meme stocks and any hype. All right, hype is bad. Hype is trash. Meme stocks are bad. Meme stocks are trash. Even if they've made some money, the question is it reliable? Will it continue? Like, I like what Ant Dog just did there, right? We're talking about NVIDIA. And he's telling us basically his thesis for buying NVIDIA is that they're going to supply 90% of the chips for all these data centers. So you got to do your research to figure this out. Even if it's reading a book, reading an article, watching a broadcast or an interview about NVIDIA, all those things count as research, all right? But you have to do that. But again, that's not hype. That is study. That is research, all right? So number 9, thou shalt use tax advantage accounts. I'm going to say that again. Y'all know I'm heavy on the tax. Thou shalt invest in tax advantage accounts because it makes no sense to pay Uncle Sam more money or Uncle Scam more money than what they're entitled to. And you can use these vehicles, Roth IRAs, life insurance. Life insurance in our community oftentimes, and again, I'm put it in perspective, it's not used to its best benefit. We use it for some things, and I'm not trying to be like the folks who are trying to push a product. I'm not pushing a product. I'm talking about a concept. All right. Many times you need life insurance. All right. You're going to need it for a long time, most of us. Wouldn't it be better if you can afford it to put money into a life insurance policy that can grow tax-free? And there's ways to then pull it out tax-free when you do it right. But the most important thing to do with life insurance is make sure you get the policy and the coverage that matches your wallet and pocketbook, meaning that you can afford it. If you can't afford it, then you shouldn't do it because it's going to be a waste of time, waste of money. All right. Number 10, thou shalt build a legacy portfolio. So you want to think about the long term. You want to think about not just you, but what's going to be left for your babies and their babies and their babies' babies. And you can start with 1, having some life insurance, 2, creating a custodial account and just investing anywhere $5 a week, $25 a week, $50 a week. It doesn't take a whole lot of money over time, over a long period of time, to build a major, major nest egg for our children and our children's children's children. So think about, I've been talking to a lot of my friends about this. Will my kids be able to buy a house in 20 years? In 10 years? the way home prices are going, they might have to stay with me. I'm okay with that. I might need to get a bigger house, but again, I'm okay with that. But again, I also want to make sure that the world is crazy. I want to make sure that they have the financial wherewithal to weather any storm with the guidance that I'm giving them, with money and hopefully wisdom, right? So that concludes our episode for today. This is the Black Wealth Rebels. This is our money church every Sunday at 10 a.m. All right. If you want to join the village and get behind the village, you can join free. You can join for $1. Go on over to blackwealthrebels.com and you can see all the classes and instructional things we have there to help you build your Black wealth nest egg. All right. So until the next time, I'm Kamari Ellis. Corey was just here. He's not feeling too well. Jimmy's on vacation, but we'll be back on Wednesday, if not sooner, y'all. Y'all be great. Y'all have a great day. Bye-bye, y'all.